Alright, so we're going to look at H4 breakdowns of every synthetic pair. If we look at this, we're starting at VIX 10. We expect it to make a short retest with a continuous bearish move to the downside here. So you can see short retest coming. So most people right now would look for, they say, buys on this particular pair. If let's say there's an engulfing candle, a double bottom pattern in H1, something like what we saw in this area here, like this double top here, those are strong signs of like trend reversal. So a double bottom here would be good to see a continuous buy, or a break below with a double top pattern there to the downside would be cool to continue targeting these lower lows. But looking at the market structure, it's pretty much bearish. We look at VIX 25. We're looking at a double bottom pattern here. There's a very strong engulfing H4 candle. So if H4 closes bullish in the next 57 minutes, then you can expect a retest in H1. Then after a short retest from this level here to down here, you can expect a bullish move all the way to the upside. So this is a very good trade here. The risk can be amazing. If let's say you enter here, you can put a stop loss below this just so that you're able to breathe comfortably, and then target these highs here. So that's like $14 risk to make $84 max, and then you can target these other levels of resistance like here for some TPs here. This is another good level, and this is another good level. So you can target 4 TPs, a 1-to-1, a 1-to-2, a 1 to about 2.5, 1-to-4, and of course a 1 to like 6, and then exit the trade. So VIX 25 is looking very good and very bullish right now. If we look at VIX 75, it's currently melting. We look at H4 as usual. We're looking at a very bearish move to the downside. Market's been making low lows and low highs. There's been some confusion here over the time. As you can see, market's been like trying to break below, but it finally broke below here. So if you entered here and you put your stop loss above, you would still be in this trade and in profit right now, even though you entered 2 days ago. So you can target these lows. Perfect entry would have been at this resistance here, good stop loss above there, entry somewhere here, and then you just target these lows. This looks like an easy 1-to-5 maybe. If we use a simple calculator, let's say you enter above here, stop loss here, $10 risk, TP down here, $30 risk. So yeah, 1-to-3, good 1-to-3. Another TP can be here, so 1-to-2, and maybe about a 1-to-1. So by now you'd have hit TP if you entered above there. So 1-to-2, 1-to-3, 1-to-4. If you add them, that's about $60 from a $30 risk. So that's pretty fair. Next pair we're gonna look at is VIX 75. Right now it just made a bearish flag, and it looks like it's going to continue melting to the downside. Markets violated this trend and it already melted. So good entry would have been somewhere above in this area, like here, somewhere here. But if you miss this double top with an entry here targeting the lows, then you can still enter the overall move. If you look at it in H4, this market is in a very heavy downtrend, hence those lines. So we're looking at the market coming down to this level here, making a double top around here, made a new lower low around this area here. So you can see we had a very strong push to the downside, then we had a retest. Sorry about that. Then we had a retest up to this level. Most popular pattern in a downtrend, the double top. So we had a double top here, which is when the market makes 2 of the same high highs, and we can expect a melt to the downside. So hence the arrow. Now the market doesn't just melt immediately. You can see there's a bit of this break here. So that's what we're expecting, which was this move right here, this strong bearish move. We can expect it to do the same thing around this area here. Now it wants shoot straight down to move in a certain pattern in H1. This is why we use this basically bearish flag to tell. So if you study your chart, you know this is a bearish flag. Market retested this area. We can put this line here at reach 50% retracement of the Fibonacci, because it's not a very strong level. It's not as strong as like this level here. It's a bit weaker because it's in between the trend, so you don't give it a very strong phase. This was the lower low it made, and then here of course it's going to trend to the downside. So what can possibly happen is the market can actually reach like this area here or this area here, retest, come back to buy, maybe does something like this, then continue shooting to the downside. That's why when you're entering a trade, you don't want to take like one position and hold till it reaches your overall TP, like somewhere down here. You'd want to enter like 5 positions, so that as the market is breaking different levels, for example, if you entered, let's say, above in this area, if you entered the double top in H1, you would have a TP here, a TP here, a TP here, TP here, somewhere here and here, so that as it's going down, you're just chopping it, you're just closing partial profits and letting the rest run. So that's on VIX 75. VIX 100, you can see currently it's about to retest. It made a push phase, which is basically this move it made here. We're just predicting it to do the same thing. The market basically bought up to this level here. After it bought up to this level, we can see it had a clean retest to the downside, or if I can copy it properly, we had a retest from this level here up to this part here. So we would assume the market is going to do the same, maybe up to here, or it can extend up to 50 here, 52, or it can actually reach this level. But this is just to plot to say, okay, if market actually comes near this level here, we can buy it. But currently we would assume that it's about to sell, because every push phase always has an exhaustion phase, and so we had 2 arrows. So if it reaches there, we can look for some buys, or we can actually sell it and then target these lows here, depending on how eager we are to trade. I'm starting to trade in February. This is just market breakdowns, just to prepare ourselves for 2026. Here we can expect a very good buy, just waiting for market to close with good confirmation. There's a beautiful double bottom there, so buys at this point would be brilliant. You know, we can even make this rectangle blue just to make sure that we understand it's bullish, and like this is good for some buys right now. We look at M30, there's a bearish one there, so what we can do is wait for another let's say an engulfing M20 candle here would give very good confirmation to say, okay, it's time to buy, seeing as we haven't had any good engulfing candle. So once this engulfs, it would be brilliant for some buys, and then after these buys we can look forward to some sales at this level of resistance. And if the sales are not present, then we can target these highs above here to say, okay, the market is going to continue trending to the upside. We don't want to be very selective, we just want to follow the trend of the market. We don't want to force anything. So that's that on this pair. VIX 101S here. Yeah, see, we want to have as many touches on this level as you can. So if you can see in the past, we have touches there on the left and the right. We look at VIX 151S. You can see that, okay, the market made a push phase, it exhausted up to this level here, and then it's continuing to melt. So if we look at the lines that we have on the pair, there are not that many lines. Some are not showing, I don't know why. Some are not showing, but yeah, we're basically expecting a sell in this pair here to the downside, because it had retested up to this level here, which should have been about 50 of the Fibonacci. So if we change our fib and we just put it at 50, each VIX pair has its own Fibonacci that it uses. So yeah, this level here was a good one to wait for the market to melt, reach that level, melted, and now we believe it's going to continue melting. So another good level to assume it's going to reach up to is here. So if we sell where we are right now, we can hold up to all the way here, but we have to be prepared for the market to retest because other people have to also enter. But if the market shows strong support here, then we can target these highs. But like I said, you can't just target highs immediately. You also have to look for some confirmation patterns to see that, okay, what you're doing is actually I would say making sense. So yeah, you can see this was also an intermediate level where market came, retested and whatnot. Then the strong level would have been here because this is the one that made the market push all the way down. Okay, so the move basically started from here, right? So what you want to do is predict that the market is going to do the same thing. Yeah, the strong push from above to down. After reaching down here, the market retested. How did it retest? It started showing different structures to basically describing this move all the way to the up here. Then we're predicting that it's going to make another move, which is basically this move that we're predicting to the downside that already started from here. So instead of predicting as it melting immediately, we can look for some confirmation patterns to enter it. Like one, we saw there was a retest here. After this retest, we've seen the market has reached a good level. There can be a retest here, or it can actually engulf and touch this level here. So these are not really good levels to enter because it's in between the market. You really want to enter from these strong levels of support and strong levels of resistance. You don't want to enter in between because a lot can happen here. You can have a retest up to here and then a continuation melt, which is what a lot of people would predict in such a type of situation where the market retests. Or it can come up to this level here, make like a good double top sort of formation and then sell, or it can actually sell all the way to the downside. But the entry you'd be looking forward to would be at least a good buy or a good sell to the downside, something like this. So you have to watch out for this pair. So basically breakdown, we move 25-1S. 25-1S, we're looking at a very strong melt to the downside. Market has reached a very good level of resistance, and like I said, we can expect a push to the downside. Another thing I like is using Fibonacci in such situations. Right now, VIX pairs are trending smoothly, so you can't really have a lot of errors. Market is reaching these good levels. Like I said, it didn't always reach 50. Sometimes it can reach here, it can reach here, but as long as it's playing within your area and you can see a level it's created, you can take a sell. So this can be a very good sell right now, even if people are late, and these support and resistance lines I've created can be used as TPs all the way to the downside. We can of course expect it to melt up to here or up to here, depending on the previous support and resistance levels we've seen in the past. Seeing as the market has melted and has been at such areas before, this would be a favorable one to say, okay, final TP can be here. Another pair, if the market closes up here in H2, then you're looking at very good buys. If it closes below, then you're looking at very good sells for this pair. So depending on what happens, really there can be a retest and a buy, or if it violates and closes below, then you can wait for a sell and you take a head and shoulder pattern sell confirmation from about this level here. So yeah, this is another pair where some food for thought can be done. In the case that it closes below, then we can be looking forward to something like this. But right now, overall, this pair is bullish if we look at the overall time frame. So more buys are higher than sells, but if the market wants, it can come down here. Then after it comes down here, it can actually now buy to make that double bottom confirmation, which is a popular pattern in an uptrend. So yeah, anything is possible. We don't want to decide what to do. There are no fundamentals involved. We're just looking at what we're looking at. 51s, of course, is in some brilliant buys right now. Beautiful double bottom pattern with a shoot to the sky there. We can expect it to reach those highs. If we identify how this market was formed, we can copy the styles. We can see that, okay, the bullish pattern started from 0 on the Fibonacci there, reached a resistance level here. After it reached this level, it retested up to here, 50%. It formed some formation within the 50 and 100%, just to show us different support and resistance levels. But right now, overall, it is very bullish, and we can expect beautiful buys. If it fails, reaches some resistance here and sells to the downside, that's still okay. VIX 75 is in a very strong melt. We look at H4 here, it is in a bearish pattern. It reached 50% and has a very high probability of selling, reaching about 2413. I don't know what you think, but yeah, this is my analysis for this pair. The last one we should be able to look at is VIX 101S. So this pair right now is buying. It showed a bullish pattern. The reason why I haven't put this here is because I don't chase the market. I want the most frequently touched area, which is here, to show me my support, and there's a high probability of buying. But in the case that it reaches this area here, won't be looking to buy above this area, just maybe looking for some sales. Maybe if this is like a head and shoulder pattern, but we don't want to force anything. Best thing to do right now is just buy and stop loss below. If it reaches resistance, sell if there's good double bottom top confirmation patterns. That's it.